Ladies and gentlemen, K Kim here. Welcome to the market update. Hope you guys are enjoying your weekend. Today's Saturday. Recording this Saturday at midday. It's good to come to you guys today. Looking at the market today. Obviously, as you guys know, on the weekend videos, we do a little bit more comprehensive analysis. So today I'm going to be going through, kind of give you guys total recap and a forecast, what I think market might be happening coming week and possibly remainder of this month, right? So we're going to be looking at Spider, Qs, Diamond, Russell, and the banks. We'll look at VIX, we'll look at gold, and also Bitcoin. We'll end the video with the Bitcoin there. So I think, market made some good progress here, just looking at in the last, a couple weeks or something like that since the election ramp here. So that was the last day of October, right? And this was that election week. And then ever since then, market has been moving sideways, right? So I think everybody's wondering, and that's what we're trying to figure out in this video is that, well, okay, we saw that market ramp on that election week. So can this market continue to move higher after some kind of consolidation, right? Or to the upside? Or was this some kind of a fake out to the upside before this thing potentially pulling back, filling these gaps, possibly even coming back down to retest the rising pivot, which we've been talking about for a couple months now, right? So all that we're going to try to figure out in this video, and it is all coming up right now. All right, so let's actually follow up from what we've been talking about this week on my daily update videos as we check out that 65-minute chart on the S&P, kind of looking into more of a shorter term price section, and then I'll go back to the daily and look at those indices in a big picture analysis, right? So market is down, as you can see here on the S&P, is by Friday, as of Friday close, is down about 0.7% there. Let's see. So we got, S&P down 0.7, Nasdaq same, Dow about 0.7. Small caps are positive, right? And the banks is also, it's a mild down day, nothing crazy on Friday. It's a mild down day, right? When it's down less than 1%, it's considered mild down day, because when the bears come, they like to push it pretty hard. 1 to 2% will be normal down day. For bullish day, around 1%, like a little lower than 1 or a little over 1 or around 1% is normal bullish day. Normal bullish day usually. That's because usually when the bulls make a move, it takes days and days, and then they like to, steadily climb it. I mean, they'll have some big moves like that in a general sense, right? So 0.7%, it's a mildly down day on Friday. So let's try to figure out though, what we can expect going into next week here. So just quickly, it looks like this is like, let's see here, 1, 2, 3, 4, 5, 6. So this is right here is the Friday's action, and this is the Thursday's action, right? So that's Thursday and that's Friday. So it looks like Thursday we did see a move to the upside, but unfortunately was not able to close above my short-term moving average here, right? It would have been better if it was a gap up above it. And over here, as you can see, this is why gaps are great, because a lot of times there's a resistance coming down here, right? That short-term moving average. Instead of climbing it up, right, next day, we gap it over, right? Jump over that fence, and you see there's a great, rush to the upside right after that. But here we actually made a move on Thursday, and we closed right to that short-term moving average, right? It is no coincidence where it stopped there. Even the last hour, where it looked like it was going to break above, you see that long upper wick? But it came back down, closed just below the short-term moving average there, just so the market is going to make you guess, okay, now we're right on that resistance. We're that so close, man. We just got to get above it. And next day, it looks like we open flat and then not able to break above it. And then this is a second hour trying to break above it again on the second hour. Didn't happen, but looked pretty promising on the second hour, right? So third hour, another fluctuation, but it's taking too long. You see that? It's grinding and grinding, right? And it's starting to feel like a little bit heavier in the short term. That's a fourth hour. That's third hour, fourth hour, fifth hour. So pretty much all day long, 5 hours straight, right? On Friday. Right, that's a Friday's action. Yes, last night's or yesterday's action, right? 1, 2, 3, 4, 5. Right, about 5, more than 5 hours. These are because these are 65-minute chart. They're just not able to get above my short-term moving average, and that moving average continues to decline, as you can see. And then what happened? The micro-term pivot, that support was lost. And all these short-term traders getting stopped out, right? And then you can see that all of a sudden just that support was broken. And then that's what happened on the 6th hour. We just kind of tanked, right? So that was the kind of what happened in the last 2 trading sessions. So, I mean, obviously at this point, we have to give some benefit. We have to give some weight on this short-term moving average. It definitely showed us that it does have impressive resume because it's been acting as support here. It's been acting as support here. It's been acting as support here. I'm talking about the short-term moving average, that squiggly line. If you're wondering what that short-term moving average is, check out the description below, and I identify how I set up my short-term moving average and my mid-term and long-term for my 65-minute chart. Anyway, so you can see, and then all of a sudden right here, that short-term moving average no longer supporting the bulls, right? So right there, and then this thing came. Ever since then, my short-term moving average is not helping the bulls, rather it's helping the bears. So as of today, we want to give benefit of the doubt to the sellers in the micro to short term, right? So let's kind of zoom out, kind of look at maybe more with just flat out short term, right? So flat out short term, we're still holding this level. So benefit of the doubt goes to sellers, micro to short term, right? But in just short term, I think I want to still be neutral just because we're holding this level. That's a rising pivot, right? So because of this, I don't want to quite give it bearish yet in the short term. Micro to short term, I'm trying to be as precise as I can be. Micro to short term, I'm bearish because that short term moving average is declining. But looking at more of a bigger picture here, we're talking about a month or so. We'll look at that as a short term, maybe short to mid. So micro short term bearish, short to mid, we'll say neutral, 2/3 neutral, 1/3 bullish, because we still do have these higher lows. We don't know though, as of today, if this is gonna be the level that is actually going to bounce and start cultivating higher low. We don't know that. We just know that it is sitting on that vicinity where the rising pivot is residing at this moment. And that's the same level where we're coinciding with that 355 support, which is a gap area. So we got the rising pivot, we got the gap area support, right? So because of this, I wanna be neutral, right? Neutral in the short to midterm, right? My midterm moving average is still rising. As you can see here, it's just hovering around 353. Best case scenario for the bears, right? I'm talking to bears right now. You're not going to get this kind of opportunity again for bears. Bears can bring this thing down and break below it, right? Early trading sessions maybe on Monday, you know, break below this rising pivot, break below this horizontal support, and then continue lower, what's going to happen is bears going to fill the gap at 353, and then it's going to meet with my midterm moving average, and that's going to act as support. The danger of that is, what if this thing come all the way down in the first hour, fill the gap, retest 353 and my midterm moving average, but by the end of the hour or second hour or something like that, you see long lower wick, right? Little bit of small body at the top, right? That's hammer. And then on the second hour, you see this like this. And then the third hour, you see something like that. Have you seen something like that before? Yes. Market comes down, fills again right here. This was a gap right there. You see that gap? There's a gap here. Came and filled it, long lower wick, and then brought it up next day, right? So that's why if bears just bring it down, break below that rising pivot on the intraday on Monday, what's going to happen is then potentially, I'm not saying that's what's going to happen, just because we have support there at 353 and my midterm moving average is here, it's going to act as support. And if we do see some kind of a hammer candle follow through, do you know what happens? At the end of the day, we still have to say the market is holding above the rising pivot. We do that. We get back above my short-term moving average. My short-term moving average start doing this. That's bullish price action, and all the bears get faked out here, especially a lot of those who don't pay attention to gaps and the midterm moving average. They think, okay, we're breaking below the support, because a lot of people are going to think, okay, that's a strong support, and once they think you start breaking below it, that this thing go down hard. But you know how the market does. It comes down, freaks everybody out. Maybe all the stops are gets taken out. All the bears start shorting it more. And then this thing gets right back up and then do this, right? So actually, the best case scenario for the bears is gapping it down. Turn this entire thing as an island top. Gap it down beneath 353. 350, 280 to safer, because my midterm move. So you want to gap it down below this gap area at 353.17 and make sure below my midterm moving average, because my midterm moving average is also hanging out here trying to protect this level. I think that's best case scenario for the bears, gapping it down, make this into an island top. If we see something like that, we see a gap down, let's say, on Monday, right? This thing comes down 352 or something like that, Monday or Tuesday. We're going to come back down here. We're going to come back down to 349 if we see something like that. If we see something like that, it will make things hectic for the buyers, at least for a couple weeks. So that's best case scenario for bears, right? Not just come down and fill it, because there's so much support here. Buyers are going to rush in this vicinity, right? Buyers, obviously, for bulls, you want to find support here somehow. Keeping this gap open is going to favor you, because we still have that momentum, because we remember this momentum right here, that's big gap. There's some attempt to fill this gap, never got filled. Even when this thing came down, this gap was never filled, 349. We saw a little bit of pullback, little double bottom, kept moving higher. All of that energy came from this gap. So it's better if that gap remains open at 353, right? Rather than you letting the bears filling it. But then again, bears filling the gap is better than bears gapping it down. So I think a lot to watch on Monday, right? You don't want to see bears gapping it down if you're a bull, right? If you're a bear, you don't want to see bulls getting back above my short-term moving average. Or like if we do see a move to the downside and fill this gap, sometimes I've seen where it has to be some tremendous push. Like it has to be a hellfire to bring this thing down below 353, which I've seen it happen where sometimes when the bears come, they can just push right through. And it's rare. It doesn't happen all the time, right? It probably has to driven with some kind of news, something where it could just break well below 353. Again, it doesn't happen often, right? So gapping it down will be the best case scenario there for bears. Let's actually look at a midterm. I think I spent a little too much time here on the 65-minute chart. Let's look at a midterm here. So we're now looking at a couple months, several months of price action here. Looking at the midterm. So looking at the midterm, we want to understand that we still in the vicinity of higher high. This means that this market is preparing to cultivate that higher low. Problem is, we don't know. Is this going to be that higher low? Or is this going to be that higher low at 349? Or is this going to be 341? See, that we do not know as of today. It could very well be 357. It could very well be 341. But when the market cultivates that higher high, it has good probability that market is pulling back to establish that higher low, not to come all the way back down, break below 320s, right? We have a high probability that market is trying to figure out where that higher low is going to be, right? Again, is that going to be a 357? Possible. Is that going to be a 350? Possible. Or is that going to be a 340s? See, we don't know. That we don't know. That's what we're trying to figure out here, right? One thing I know about the market is this, and I've told you guys this before. Market likes to bounce early or late. Never in an ideal level. I'll give you an example. Market got up here, right? This right here is an ideal level. A lot of people are looking at, right? I think ideal level is 3. Here, let me put a box there. This is ideal level that everybody can see that's a strong support, right? So that's ideal level that everybody's looking at. 340s, 340, 335, right? After market made a move, right? Made a higher high. That's bouncing early. That's an ideal level. But what does the market do? What actually market did back in late October? Market bounced late, right? So again, that's support here. That's early bounce. That's ideal bounce. That's a late bounce. There's a reason why market likes to bounce either early or late. Sometimes I've seen it where it bounces in an ideal level, like the level that everybody's looking at. It's very, very obvious level. Is that support that everybody can see, that everybody's expecting it to come and find support. I've seen it where market does that, but not more often than not, it doesn't. It likes bounce early or late. Let me tell you what. It bounces early a lot of times is because when too many people are looking for a steep decline, it bounces early to make sure they're left behind. But when the market bounces late, like it did here, because it definitely bounced late, it creates panic and confusion. Because what happens is a lot of people didn't want to buy it anywhere down here, right? When this thing pulled back, because they wanted further decline or something like that, or they thought the crash was going to come. Whatever reason might be, they want to wait. A lot of people, they wait things out. They don't want to just, they want to wait and see, which I don't think is always great strategy, but that's for next time. So they want to wait and see. So now they see that the market is breaking out, breaking above very important pivot resistance. What do a lot of people do? They start chasing it up here instead of buying it down here. And then they tell themselves, I'm going to place my stop beneath 340, maybe even 335. Some people might even go, you know what? I'm going to make sure I don't get stopped out this time. So I'm going to place my stop 333. But they chase it up here. So what the market does, instead of bouncing early, right? There's a lot of people chase this. And what this entire move was to getting those people, to punish those people who are chasing, placing their stop. And then all of a sudden, people chase it up here. They're like, you know what? This is going to be my last draw. Like if this thing comes any lower than 330s, man, I'm out. Because it should have bounced already. So then when the market does this for a while, you're like, oh my God, when is this thing ever gonna find support, right? And so now a lot of chasers who chase up here, they're kind of struggling. And then when you see a big gap down like this, you see that? They're out. People chase it here, they're out. And guess what? That's what creates the bottom. I'm sorry, it's brutal, but that's what creates the bottom, right? They sell in panic and then market bottom. And we saw this happening with my bullish divergence right here. Bullish divergence right here, right? There. And we also talked about, if you go back and check my late October analysis, I've done actually extensive analysis before I left because I was on my vacation on this move here, right? That, you know, when the market does not make lower low, we want to give benefit of the doubt to the buyers, and especially we got the bullish divergence occurring here, and then market made a move. Why? Because a lot of people, market decided it's going to bounce late. And when that happened, a lot of people are panicking around 325s. And they exited, and that created bottom, and the market got back up. You see what I'm saying? All right. So looking at the oscillator here, so that what I'm saying is, see, nobody knows though. The problem is nobody knows if the market is decided it's going to bounce early or ideal or late. And we will find out more, but as of today, it looks like my oscillator hasn't fully crossed yet, but we're getting there. So what this means is, if we do see further decline, either gap down or this thing continues to drip lower, right, or flush to the downside, this thing will cross back down. Maybe it's going to look like, I don't know, maybe look like this or look like that. I don't know at this point, right? But it's going to cross back down. But just because it hasn't crossed yet, bulls are not completely out of the woods yet. Bulls can actually, or bears are not completely out of the woods yet. Bulls can actually turn this around if bulls can see first 2 hours of ramp. Best case scenario will be just gapping up about 358. Let's say this thing gaps up 358. Makes it look like this. You see that? This looked pretty bearish, didn't it? It looked like it closed weak. Right, that candle, and out of nowhere, right, this thing gaps up here above this swing high, correct? So we got the swing high here. So if this thing gaps up 358, above 358 on Monday, this thing will just go right back up, and there's a lot of room to be made, right? I spent quite a bit here, about 22 minutes. So now I'll kind of go through these kind of a longer term analysis rather quickly. So here in Spider, we've been looking at this resistance here. We've been looking at this for quite some time now, right? So we can see that was a resistance there, and that was that COVID peak, and then that was that September peak, and then we're back at it, you know, post-election peak there, right? The thing about it is, we talked about it, I think, last weekend. You see how this is actually pretty strong resistance, right? Because every time we hit that level, it tanked, hit that level, tanked, but something changed here. Instead of tanking, it stopped short, got back up, pulled back, and retesting it again. So we didn't know about 2 months of span of time, we're retesting this couple times. What the market is trying to do is break this curse, break this resistance, and finally fly free. Because we're still bound by this, right? The market is still bound by this resistance right now. And that's what it's doing. And something I talked about last weekend was the more times it hits it, more likely, higher probability. Obviously, everything can happen. Anything can happen in the market because this is life. But as far as the probability, statistical probability is concerned, it has higher probability of breaking above it. We don't know in what fashion. It might come back down again and then go up later, or maybe next year. We don't know that yet. But the more time it hits, especially in an uptrend, it has a higher probability of breaking above this resistance. Again, I'm going to reiterate that I iterated last weekend. If this was a downtrend, however, market is an overall downtrend, and there's a resistance line here, and the market goes up and hit this several times, right? It has higher probability of breaking lower. And that's kind of what we talked about with that movie. I mean, if you look at things in like a micro term, right? This is a resistance here. You can see that we're in a downtrend, right? And you see how, okay, if we look at this short-term moving average as a resistance, right? I'm just using it as an analogy here, example. So we're in a downtrend. We got lower highs here in the micro term. You see, and if we look at my short-term moving average as a resistance, you see how it's hit it, hit it, hit it. How many times? 5 times. 1, 2, 3, 4, 5. We couldn't break above it. Again, we're looking at short term, right? Short term, because we're already in a downtrend. But when we're in an uptrend, and now we're looking long term, right? Are we in an uptrend? Yes. We're definitely in an uptrend, right? I mean, these are higher highs. We're not looking at lower highs, we're looking at higher highs, so we're on an uptrend. So when we're on an uptrend and we got the resistance going, the more times it hits it, it has higher probability of breaking out to the upside. When it's trending down, more times it hits it, it has higher probability of what? Breaking lower, right? So it favors the buyers, and it's a good thing that buyers are tried it here, trying it here again. And right now, what it looks like is a consolidation pattern. So that also favors the buyers. But I don't really go by that all the time because I actually look at these patterns kind of 50-50. Maybe just because we're in a bull market, maybe 55-45. I mean, we've seen something similar here, right? If I make it a little bit more realistic, so if I look at this right there, and you said if this was today, a lot of people wondering, okay, what's going to happen here, right? It's like, okay, well, it looks like there's some kind of a bull pennant or some kind of bull flagging pattern here, right? And I would have actually said the same thing. I actually would say, I probably did say it back in when I was analyzing this back in late July. Well, you know what? I would look at this 55 bullish, 45, because these short, to me, this is a kind of a short-term pattern. Because this is only like, what, 5, 6, 7, 8 days of price action here. Because I've seen these break out either direction. But because we're in an uptrend, let's say 55% bullish, 45% it breaks lower. Because a lot of times what it does is it might break lower slightly and get back up, right? So, and then it actually ended up breaking out to the upside with that bull pennant or bull flagging pattern. So we kind of have a similar pattern. And we actually have a similar price action, similar to actually back in June and July. If you look at this here, actually they're like almost repeated. They're almost like rhyming because you can see here we got this lower low. We got the lower low. We got that, that pivot. We got this pivot. And then we got this pennant. We got this pennant, right? And something that I talked about back in late October, I actually used June's price action, right? To make my argument that, look at, in June, we never cultivated that lower low and that we have to give benefit of the doubt to the buyers. And right now, same thing happened in late October, same thing happened, which I talked about in late October. We have to give benefit of the doubt to the buyers, despite the fact that we saw a big gap down, right? And there's a lot of jittery, a lot of anxiousness. There's a lot of people worrying, right? Skittish about this market, right? Just because markets start coming down pretty hard prior to the election. But like I said I want to give benefit of the doubt. Like, I ain't gonna be all worried about it. I want to see how the market behave. And then what happened? Next week just ramped right back up to new all-time highs. So we have a very similar price action here and here. Can you see that, right? And in here, we did see that, that pennant, that flagging pattern actually played out to the upside, as you can see here. Question is this going to be doing the same? That nobody knows. That nobody knows for sure. I think we have a good probability, right, that this thing breaking out. Why do I say that? Because we're in an overall trend. So I want to favor the buyers. So we'll figure out, I think we'll know more going into next week. Obviously, I'll tweet things out. We'll look at the market every single day on my daily update videos. But I think, again, I'm going to say the same thing like I said back in late July and early August. probably there's a 55% chance we're going to break out to the upside, maybe 45%. And when I say 45% downside, doesn't mean it's going to come all the way back down to below 320. It might come down, find support 348. It might find support 340 before getting back up. That's what I mean. Either way, I believe we're going to cultivate that higher low somewhere before it's making new all-time highs. So just a little detail, are we going to break up from here, or are we going to pull back first and then break up? Either way, I think we're going to break up. Either way, we're going to cultivate, establish that higher low, and we're going to get back up to new all-time highs. And that's what I'm proposing here. Let's go to Qs. So Qs is actually consolidating, right? And Qs is actually looking better because it's actually holding up above that rising pivot, right? Remember, Spider is actually trying to break above it. Well, Qs already broke above it, retested a couple times, and now trying to continue. And this is nice price action. I don't know, people always want to look at things in a negative light, and a lot of times it's guided by their fear. But if you actually study the price, you know that a lot of times market sees a steep decline like this, right? We saw a steep decline, I think 35%, and market makes a move. And when market starts making sideways move, it's actually constructive price action. Because obviously you don't want this market to keep going higher without a pullback. That will be dangerous. Because then there's a potentially, after, if this market just keeps going higher without corrections, there's a danger of this market actually just completely crashing down. So we want to see, after market made a big run like this, you do want to see the market to take breather and take its time and rest. And that's what the Nasdaq is doing, is resting, right? This does not mean that it can't make lower low. There not going to be any shenanigans. It doesn't mean it's going to be perfectly like pretty shaped consolidations. It might have breakouts, fake downs, or something. But as long as it, we don't get into a downtrend, because we're still in an uptrend, and my long-term moving average still, right, still rising. So we're still in an uptrend. So we want to continue to give benefit of the doubt to the buyers in the long term on the Nasdaq. But in the short to mid term, I think that's starting to be a bit more maybe neutral on the Nasdaq. And I want to see more of sector rotation occurring throughout the remainder of this year, which we've been seeing some of that, because you can see like Dow made a move, making higher high here, making new all-time highs. Russell made a move. Banks made a move. These numbers, did you know these numbers? I mean, banks are year to date were down like negative 25. Russell was like negative 20 at one point. And Dow was also heavily lagging, while the S&P was like, just breaking even year to date. And the Nasdaq was like 25. They were Dow, Russell, banks are heavily negative. But look at the numbers now, the year-to-date numbers now, right? They all caught up, and we just waiting for the banks to catch up. Let's look at Diamond here. Diamond, we had actually nice big gap up. We're holding that gap, but only difference is, like Spider actually came here. This gap is actually filled. So I'm going to actually delete that. So there's actually no gap. So you see this gap? That was already filled. There's no gap here. That gap was already filled. However, on the Dow, the gap is not filled. That tells you that while the Spider came down, filled that gap, right? Dow and Russell and the banks, those three lagging indices, gaps are still open. That in itself tells you that there's a little bit more buying pressure. Funds are flowing into the Dow and the small caps and the banks out of the S&P, out of the Nasdaq, right? Just people rotating funds. They're not like taking everything out. Maybe if there's some stocks that have gained great gains, and that's some of the things I've been doing also, is that you take some of that money and put it into more undervalued stocks, right? So Dow, we're still holding this gap, and that's highly favorable to the buyers. Highly favorable, because this gap is open, and then not to mention, we are faithfully cultivating higher high here. We also cultivate another higher high, looking at from this high, right? So from the COVID peak, Dow is now cultivated higher high after the COVID peak. Let me tell you what, every time in the history of stock market, I've said this many times, when the market makes 20, 25, 30% steep correction, and then market goes back up to make new all-time highs on that same year, there has never been in the history of stock market where this thing came all the way back down to retest that lows, that major lows, or got into a bear market. It has never happened. So this means it highly favors the buyers in the long term. We'll have shakedowns, shenanigans in the short term, man. But if you're a long-term investor and long-term trader, none of these short-term shakedowns should be any kind of concern. Because, I mean, when was the last time you saw this market not seeing any shakedown? We got the shakedown here. 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 You got shakedown here. If you truly understood this market, all those shakedowns actually were opportunity to accumulate more for long-term trader and investors, right? Right now, we just have very, very short-term consolidation, which isn't bad, considering the fact that that election ramp, we just made a big vertical move, so it makes sense to move a little bit of sideways. Again, when people are chasing, that's always things get very, very complicated. It's always that when people start chasing, when things get crowded, things always get hectic and complicated, meaning a lot of people didn't buy it down here. A lot of retail traders I'm talking about, most people trying to chase it up here, and now they have to go through this. It always happens in the market. You start chasing, market is to make sure to punish you in some ways. And when things get crowded, right, that's when things get difficult, right? Think about how smooth this move was from here to here. How smooth was from here to here. Right? How smooth is from here to here? Why? Because there's nobody there. It's not crowded at all. But when people are chasing here, things got pretty, a little bit icky here, right? So again, I want to continue to give benefit of the doubt to the buyers. My short-term moving average on my daily chart is probably still trading above it. So let's continue to give benefit of the doubt to the buyers in the long term there. Let's go to small caps. Small caps holding up extremely well. And I'm very pleased to see how well the small caps are holding up. Not only that, it looks like small caps did cultivate it. Let's go to line chart here. Yeah, so look, as you can see, that's all-time high, right? Just make sure there's nothing else there. Yeah, so that's all-time highs. We haven't gone into the all-time highs. That's because that's a COVID peak right here back in February 2020. And then we made what? We made new all-time highs. It took Russell 2000, because that was back in 2018. So 1920 took 2 years, right? This is a great news. You know why? Because this was actually lower high. This is a lower low. So it was a little bit dangerous for the Russell 2000. Right? A little bit dangerous for Russell 2000 because we got lower highs and lower lows going. That's the definition of downtrend. So if this thing would have continued to do that, but I think I've said this before to you guys. I think I've said it before. I mentioned it. I don't know if you remember. I said when you're analyzing the indices, you can't just look at Russell and think the entire market is bearish because of this. Because only Russell did this. Not other indices. Not on the S&P, not on the Nasdaq, not on the Dow. Not even on the semiconductor. And those are big indices. And so when you see small caps doing this, you can't look at this and say, aha, I found that little piece of puzzle, man. That's the clue right there. This entire market is going to crash down because look at the small caps. We got lower highs and lower low. Instead of thinking like that, what you have to say is, well, what about other indices? How's S&P holding up? What about the Nasdaq? What about the Dow? What about the semiconductor? And you got to put them all together and say, okay, we understand the Russell 2000 is weaker than others, but we can't put our priority on the Russell 2000 and say, okay, well, because Russell's weak, this entire market is going to crash down. Instead, what you should say is, well, the S&P S&P doesn't have a lower highs and lower lows. We're talking long term now. S&P doesn't have a lower highs and lower lows. Nasdaq doesn't either. Dow doesn't either. Semiconductor either. So because of that, we're going to assume these large indices, these large cap stocks and large tech stocks would bring the small caps up, help the small caps up, rather than thinking the small caps gonna drag everything down. And what happened? If you thought like that, you were right. Because you see, S&P and the Nasdaq and the semiconductor helped small caps to make new all-time highs. And it took 2 years to do it. And this lower high, lower low thing, it's been completely neutralized. We no longer have a downtrend. We actually still in an uptrend. Why? Because that's a high and that's a higher high. And small caps got some nice momentum going here. Small caps got some nice momentum going here. You know? And a lot of these gaps are holding. And we're not even near my short-term moving average on the daily chart. Holding up the best out of all three I just analyzed. Let's go to the banks. Banks. It's also nice in the banks because we're getting higher high now. And that's important. That's important. Especially if you're a long-term investor, because if you're a long-term investor in the banks, because with that higher high, now you can say, okay, the market is continuing to establish an uptrend. That's important for long-term investors. And why? Because long-term investors don't care any kind of pullbacks, man. Because we understand there will always be pullbacks. It's just going to give us the opportunity to accumulate more if you understand the long term, right? As long as this market is cultivating higher highs and higher lows, we know that we're on an uptrend. And that makes long-term investors and long-term traders to be secure in their long-term positions, right? So, and that's a good thing. If this thing keeps going higher, that's great. If this thing pulls back some of these levels, maybe I'll look into add more on some of the banks. But I want to continue to give benefit of the doubt to the buyers, you know, in the overall picture. You see even the banks actually did make a higher high. Only Russell 2000 failed to make that higher high. Even though this was a lower low, right, because of COVID, but you see how fast we're coming back up here. But we did have that higher high. So technically, because it didn't have that lower high, we were not in a downtrend because of that higher high. Only the Russell, the small caps, did not have that higher high. But anyway, so we got a big decline, and then it's making its way up. And it got big gap up, and that was a 10% gap up. I remember the day when I came back from my vacation on Monday morning, I remember the banks were like up 10%. And that's a huge gain. I remember some of my bank stocks, because I was accumulating some of the bank stocks, were up like 25% a day. It was crazy. So banks are holding up really well, and I want to continue to give benefit of the doubt to the buyers there in the long term. Let's go to VIX real quick. So VIX is starting to stabilize a little bit. We're back at this support. So either we pop a little bit or we start coming back down. Not sure. We're at the support now. But looks like we got that resistance there, and that's where we saw this market coming back down. There's a gap there that hasn't been filled. Sooner or later it will get filled. The question is it going to get filled this month or, December? Because if this thing comes on and fills this gap, market is sure to make a move to the upside. Let's not spend too much time. I don't like analyzing too much VIX. I like using it as a supplement in my analysis, but I don't like to put too much weight into VIX analysis. Let's go to gold. Gold is still doing same thing here, just kind of a consolidating here. But in the long term, I still want to give benefit of the doubt to the buyers. You see my long-term moving average is still rising despite the fact that we had a COVID decline. That's definitely a buying opportunity there with my long-term moving average is still rising. That means you want to continue to give benefit of the doubt to the buyers. I put some Fibonacci analysis, levels here. So where it's currently finding support here. You know, I think if this thing actually come down to 161 or even 150, I'm not saying it's going to, because again, market bounces early or late, so I don't know which one, right? So, but if it does come down anywhere at this level, I think it's a good buying opportunity there. Let's go to Bitcoin, and I'll let you guys go. So, I've been analyzing Bitcoin with you guys, I think since like July or June or something like that, and I've been, you know, I've told you guys that I bought it here, and I bought it here, and I bought it here, and I mentioned it on every video when I was analyzing it back in like late July, and then like early September, and then like early October that I was buying in this vicinity. And so, and the market, and then all of a sudden you see, and you know, all it happened was because of these higher lows, and that's what we're analyzing, weren't we not? We were saying, okay, we got these higher highs and higher lows, and then when the market pulled back, or Bitcoin pulled back, this is what happened here. What was I saying? I was saying that the market is now pulling back to establish that higher low, but I don't know where. Market likes pull back, market likes bounce early, ideal, or late. What did it do? Market bounced late, right? So then I was buying here, I was buying there, because I thought it's gonna bounce like somewhere here, which was my ideal level. It didn't, and then market decided it's gonna come down a little more. I bought more, and with that we got that higher lows, higher highs. What we call that an uptrend. An uptrend. That's when this was pulling back. I was analyzing this with you guys every weekend. That's what this market is gonna do. Market's pulling back to cultivate that higher low, and then what happened? Boom! Finally, this thing breaks out, makes new highs here. I mean, that's that peak. This was back in mid 2019. We broke above that. So I was going long around 10 and 11s, somewhere in that vicinity. I did close 1/3 of my holdings on Friday. 1/3. So I'm still holding 2/3. And that's kind of how I like to play it. I like to get in long. And this is what position trading is all about. You kind of position yourself in this vicinity, and you want to get in before the breakout. And a lot of people are asking me about this. How do you know? How do you do that? How can you know what I mean? How can you get long before the breakout? Because a lot of people, what they do is they want to wait, and they want to see bars. And then when they start seeing the breakout, they want to chase it. I hate chasing. You guys probably been there. You start chasing, you get burned. I hate chasing, right? So this is why I sacrificed my short-term gain. See, I went long here, and there was some gain. I don't know, like 30-some% or something like that. I held it because that wasn't what I'm going after. Again, I'm not a short-term trader. I'm not a swing trader. I'm a position trader and a long-term investor. In this particular asset, I was position trading, obviously, because I'm not going to be holding Bitcoin long-term just because I understand its potential implications, because it's go up and it's going to crash. You know what I mean? Like, I don't know, if you're truly a Bitcoin believer, like it's going to change the world, man, in the next 10, 20 years, it's going to be huge. Then, I mean, I made a decision that I'm not going to be a long-term investor in Bitcoin. That's all I'm saying. I'm going to be position trading this. Especially this is kind of considered penny stock. But anyway, so when you position trade, what you do is you get into a position, right? And you're waiting for that breakout. Did I know it's going to break out like this? No. I thought it was going to maybe start building an uptrend, but it just went straight up. Sometimes you never know. And I caught a good break here, close out 1/3, and I didn't close out everything just because if the market keeps going higher, I want to be part of it. If Grayscale Bitcoin keeps going higher, part of it. I closed out 1/3 at a pretty nice gain by this time, so I want to take some off. That way, if we do see a pullback at a certain level, I want to maybe add back a little bit. So what happens is, there's a great thing about position trading is, once you get into a position, and you're disciplined about that in your approach, once the market breaks out, you have a luxuries of options. first of all, you don't have to worry about where the market is going to go, right? Because you already battled it out back at 10s and 11s. So now this is a very low maintenance position. Obviously, I'm holding multitude of positions in different stocks and things like that. So it's very low maintenance now because well, you know what? I mean, if this thing pulls back to 17, I don't care. You know what I mean? Like, so you're just sitting back and relaxed, and it's not a high maintenance position anymore. It was kind of a high maintenance when it was here, because I'm trying to figure out, okay, where is that high low is going to be? Where is that going to be support levels going to be, right? Now the market Bitcoin has moved, I'm going to be, okay, what should I do now? Now I got all the options. Should I close out some? Should I close out half? Should I just hold? Or if there's a pullback, should I add more? And when you're more relaxed in that state, you tend to make better decisions. But you know what happens when you chase it? Once you start chasing it up here, you're getting worried every single day. Do you know why? Because you're like high on something. You guys been there, right? You chase it, you feel like you're high on something. Because let's say you did chase it here, and then next to the mate, you're like, yes. Like you feel like you're you know what I mean? Because you're chasing. And then like this thing comes down, you're all like sad, and you're like, you know what I mean? And you're always like, you're always like feeling a little bit pressured. That's gone when you have right entries. Right? I'm not saying I always get the perfect entries, no. But this is one of those scenarios that I was actually doing this with you guys every week and analyzing Bitcoin, and you guys knew exactly where my entries were, and I was explaining why I did that, and you guys saw this happening every weekend, how this was all playing out. And so again, I closed out 1/3 here on Friday, and I'm holding 2/3 now. And as of today, I don't know what I'm going to do with it. For sure, I'm not going to be going long here. I will look at one. Here, I'll look at daily with you guys. So this is a daily of Bitcoin. So if you look at the daily of Bitcoin, so that's that. So you can see, why is that this time it actually didn't pull back but broke out? What's the difference? Because it's a correction. We saw correction. How come this time didn't see a correction and my oscillator moved sideways and this thing keeps going higher? Do you know what? Because this thing actually is no longer in a downtrend. We cultivated that higher low. So you also, not only, you can't just look at the oscillator and trying to be like, okay, buy and sell signal. You have to understand the environment, the context of it all. You have to understand the context and have to understand how to read this oscillator. I saw this oscillator when we got into overbought. I didn't sell it. I held it, right? Because I knew this market has gone out of higher lows and building momentum. When that happens, what happens is when the oscillator gets into the overbought level, instead of pulling back like here and here and here and here, it moves sideways. And then this thing keeps going higher. Does that make sense? All right, so I spent a little bit longer than I've anticipated on this video, but I'm sure you guys don't mind. So thank you for your viewership. Thank you for your comments, interactions on Twitter, StockTwits, and YouTube. So hope you guys enjoy your weekend, and hope you guys enjoyed this analysis. I hope that, because I'm spending hour on these videos with you guys and all the video that I do on a daily basis, you know what I mean? And then for me to, process it, edit it, upload it, send it out, it's a long process to do all of that. I could be doing millions of things right now, Saturday afternoon, but spending my time to do this because hopefully I could help somebody, with their own analysis as they continue in their endeavor in this market, because this market isn't easy. If anybody tells you this market is easy, or, I see these things on Twitter, keep it simple, stupid, like do not make the market complicated. It's all bull, man, because your life is complicated, right? You cannot make life simple. The market is extremely, extremely complicated machine. extremely complex. How can you make this? You cannot make this simple. If you want to achieve anything in this world, not just in the market, but anything, you want to be good at piano, you want to be good at tennis, or you want to be good at surgery, or whatever, any expertise, any skills you want to be good at, you got to work hard at it. And it's complicated. There isn't anything out there that you can do and just everything has to be simple. There's nothing, especially when it comes to like specialized industry like this in trading, investing in the stock market. It's extremely, extremely complicated, right? There are people out there who will tell you what you want to hear, but I'm telling you what you need to hear. It takes years and years of hard work to understand, right? And the market always evolve over time, and so you gotta adapt to that and evolve with it. Anyway, you guys enjoy your weekend, and good luck trading next week.